morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with my co-host Kevin Casey, and today we are joined by Linda and Andrew Connor, and they are with Mortgage Education Institute. Did I get that right?
Yes.
I literally have to slow down and through, but I'm getting better, way better. So anyway, good morning, guys. Thanks for joining us today. We're very much looking forward to hearing the latest and greatest in all things NMLS. With that being said, guess what? Today, the 10-year treasury is at 4.3. That is the lowest I've seen in a while. So that's good news and much welcomed. Just to give you a little heads up for the rest of the week, I'm just realizing most weeks are busy news weeks. So tomorrow we have new home sales and mortgage applications. We have mortgage applications every week. Thursday, we have pending home sales, GDP, and jobless claims. And Friday, we have PCE. And PCE, just to remind you, is personal consumption expenditure. It is the Fed's favorite measure of inflation, and it is a very market-moving report for sure. So it'll be interesting to see how that goes, especially since
Last time it was terrible.
well, it wasn't no. So we're thinking it should be better, but we also thought CPI should be better. But what did they do? They came back and they revised last year's numbers up. We thought we were replacing higher numbers than that they ended up replacing. So it looked like it came in hotter. So frustrating, so frustrating. But the other thing too, I just wanted to mention is, so we were waiting. We've been waiting for a few months. Okay, we're going to have better inflation numbers, January, February, March, right? We've been waiting for these moments and they've been a little disappointing. It reminds me so much that we are always waiting for the next lower rate. And then something happens, like they revise the numbers up or whatever, it doesn't come in. And then we're all disappointed and everyone, it's annoying. So
I have a feeling the number won't be so accurate this month. And why I think that is because I think all of the employees over at the Bureau of Labor Statistics have been busy writing up reasons why they're employed.
oh my God.
And
Okay.
they probably are putting about as much, BS into those letters as they do the reports.
Okay, so should I share with them my list of my suggestions for what to tell Doge that they did last week? Should I tell them? Kevin, I'm looking
I don't know if you should read this stuff because it's pretty bad. But anyhow, go ahead.
bad. Okay, so I just had suggestions, because Doge had sent the email over the weekend saying, please validate your existence if you're a federal employee. And, for some of those people, they've been told stop working. So I thought that was an interesting ask. But then President Trump came back and said, never mind, you don't need to. You don't want to. So but
But then today they said you have to again.
okay, I didn't see that. Was that after 1 p.m. yesterday?
I don't know. I heard in the news this morning that they're saying you have to do it again. So
Okay, well, here are my suggestions. Ready? I met with a career counselor. I transferred all my contacts from my work phone to my private phone. I connected with recruiters. I worked on my resume. I got a manicure and a pedicure. I wrote letters of recommendations for colleagues moving to the private sector. I mended my relationship with my best friend from 8th grade. I went to daily AA meetings. I got to #1 in Duolingo Diamond League finals. And I met a medium at the Lincoln Memorial in an attempt to reach our founding fathers to see if they have any suggestions. Oh, yeah. With regard to the current situations, I amended that a little bit. My initial versions was slightly different, but anyway, I have heard no reports of Doge showing up at BLS though, which was my suggestion. And I wasn't looking for efficiency, I was looking for accuracy, but so far no luck on that. So with all that being said, it was interesting to hear the Fed's comments about jobs, because as we're hearing that there are a lot of people who are going to be leaving the federal government payroll, we're thinking jobs reports, right? That's kind of in our heads. And what I read was they're not going to show up in the initial claims numbers because of their severance packages. They won't show up until September at least. And then maybe by then they'll have new jobs. So hopefully, I mean, cross your fingers, right? So they're going to show up in BLS, but maybe, maybe not, in my opinion. That's just my opinion, just my opinion.
But you know what? They'll be experts at finding jobs and dealing with what we've been dealing with or the public has been dealing with as far as ghosting and false job postings. And so maybe they
And
might
these,
start getting,
you don't mean us, right? Because I mean, was the last time,
yeah, we don't have to deal with that, but the public.
I mean, Kevin, was the last time you changed jobs? Just tell us.
Yeah, that was quite a long time ago.
No, I really, let's give us a number.
Um,
Yeah, you can't
I
count
think
that.
it was 2003.
You,
No, 1993. There we go. 1993,
I'm like,
10 years earlier.
yeah. So he's been on the same job for like 355 years. So anyway, it's yeah, thank God we in our business. I mean, I don't know what everyone else does. You don't have to look at a jobs posting. Anyway, as an LO. All right, let's move it along, shall we? Also just wanted to start with a cheery note, which is home price appreciation. So Case-Shiller came out with their report. It's up 3.9 from 3.7, and FHFA's up 4.7% from 4.5%. And those are year over year numbers, which are great. I mean, great. I mean, all things considered, CoreLogic's at 4.5% for 2024. Redfin was at 5%. So we're very solidly in the positive appreciation
Mhm.
side. So really,
But the headline said that home values crashed.
what headline?
I don't know, someone, I see it all the time.
Every once in a while, Kevin says something like that. I'm like, well, what did it say in the article? He's
Well, I
like,
could show it to you, but I just ignored it, so I didn't keep it.
crap out of him because we literally preach don't just read headlines, for God's sake. Okay, so anyway, also Dr. Lawrence Yoon, who is our buddy, who we'll get him on here in the next probably 2 months or so. He says that things are looking up, so they are really forecasting. How do I write that down? They're forecasting some big increases in the next 2 years in existing home sales. So that is good for all of us. So whatever the rates do, people need a place to live, right?
Yes, they do.
Yes. So we just focus on what do we have? How do we make this work? How do we go get loans? I mean, they're talking about big. So we went from about 4 million units this year. They're forecasting 4.5 million, then to 5 million in the next few years. So those we'll dive into that later, but that is really, really good news. Okay. So I would just like to say that Kevin got an email this morning from compliance, and it said, what, Kevin?
Well, it said various and sundry things. But the most important one was that I am to take a photo of my home office because to
Okay.
comply with Oregon state law, since I have to be licensed in Oregon also.
Okay.
And
So licensed in Oregon and
Mhm.
supposed to do this, but what often happens when a law is in one state,
it spreads.
it spreads.
Or it becomes applicable, comes highest standard. So Andrew is saying that if you get a lot of companies, they have to go around and show all their offices and make sure everything's
Yeah, so
locked up.
if you sign up with a another credit provider, to run credit report, a new company, or you want to change providers, you have to take a video or pictures of your entire office. And don't pick on me, Kevin, for old things such as locking filing cabinets. Yes, and he said what did he say? He said, who has a filing cabinet? Okay, and locking doors and so on. They want to make sure that you have all those protections in place with all the cybersecurity issues and with all of them. So Oregon is one. I believe there's a couple other states that definitely, for remote work, or if you have an office that's an actual branch office, they require that.
So they don't care about the books behind me here, and that's
They
not
know
what they're looking for.
those are not actual real books. He's never read a book. So those are just hollow shells of a book. So don't worry about that, Kevin.
Oh, that's what I could do behind me.
Yeah.
So nearly every state has some kind of remote work policy. Oregon is the most strict in regard to the pictures of your office. some companies actually view it as you actually have to physically visit the office to approve it as well.
Wait, who has to visit?
The management.
I
Oh,
never-
You're lucky you only have to take pictures.
Yeah. Knowing our manager, they probably want to come over.
well, yeah, so and we have a comment that, I mean, this is an annual thing. Other people knew about this. I didn't, so I think this is really interesting. So again, make sure that if you're working remotely or just in general, just understand what your requirements are, whether it's for a credit agency or not agency, but a credit provider or
So,
the compliance.
Andrew, what I shouldn't have are a bunch of stacks of files next to my desk.
yes, the Norman Rockwell April tax painting that's famous with the guy hunched over a roll top desk with stacks of papers. Everybody can envision that's not allowed.
Got it.
You know, I used to be famous for that. I got to be honest.
I was too. Yes, we started in the business 25 years ago, and wow, paper was everything.
Yeah.
Well, now it's like you don't have any paper. It's completely the opposite way. And yet they haven't changed the regulations about where you keep your paper because there isn't any.
Well, that's not entirely true because some of us, like if we get a set of gnarly tax returns, I print them out because I feel it better. And I've talked to other people, same thing. Like if you're crunching through income, and I don't have dual screens, and so I don't know, some of us are still doing it, the other way.
What I do is as the documents come in, I label them in the category they are as they come in.
So,
So all my income documents start with income. All my asset documents start with assets. All my miscellaneous documents start with, miscellaneous. Property documents start with property. And then I can quickly look at my file on my computer and I can see what's missing or what's not missing because wait, I have all of my W-2s, I have my tax returns. It's all alphabetical order. So if something's missing, it jumps right out at me.
Well, this is interesting. Title and escrow companies are now the insurers are probably asking. Is that I would assume that's what the deal is. The insurers are wanting to see the office as well now.
well,
Wow.
so a comment from Michael, same way that escrow and title now has a separation for visual at office space to guard inspection not announced. Okay, I don't quite get that. Guard inspection not announced. So if like a regular just shows up out of nowhere.
Yeah.
Wow. Anyway, so guys, I mean, again, this is all about security and making sure our clients stay safe, right? And all of their information stays safe. So be thinking, does this make sense? And, think back a few years ago when we were talking about Washington, where they were fining LOs $5,000 a pop for meeting their clients at Starbucks. But think about meeting your client in a public place and you're discussing their private information. How secure is that? Are you using a Starbucks link or what the heck is wrong with-
Internet.
Yeah, internet. What's the word?
Well, that's where my office is. That's my other office at Starbucks.
That's mine too.
Files up there.
Oh God. Wi-Fi connection. Make sure those Wi-Fi connections are solid if you are inputting your client's information on it. So we really, really have to prioritize this. And it's for our client's benefit, but it also helps us because then we don't end up with our tails in a sling and in court and in all sorts of trouble. So actually, Linda, that reminds me, because I've mentioned this a few times in the last few weeks. So California amends its criminal code to include mortgage fraud and consumer protections. That, Kevin, was the headline. I know that's as far as you would have read. So what it goes on to say is that on September 24th, AB 3108, the act, was approved, amending the financial code and penal code to address mortgage fraud and consumer protections. And you might be saying, well, I'm in Washington or I'm in Florida. Why do I care? Well, why do you care is because as we watch changes happening at the federal level, things are going to happen at the state level. And what happens in California often ends up bleeding into the rest of the country, or at least a big swath of the country. So it goes on to say the act prohibits knowingly filing any document with a recorder that contains material misstatements, misrepresentations, or omissions. It expands the definition of mortgage fraud to include actions by mortgage brokers who knowingly allow borrowers to sign documents with misleading loan terms. Additionally, the act mandates that mortgage brokers ensure borrowers can repay their loans based on their income and financial resources other than equity in their homes, which, by the way, is the ATR, the ability to repay, right? That came
Mhm.
right out of Dodd-Frank. So I think it's interesting. I don't know why they keep saying brokers, whether that's something that's specific to this article or whether this is
Well,
something.
because the bankers do it all the time, but they didn't want to get caught, so
What? Okay.
they had some, they had some lobbyists come up and make them different.
That's not entirely out of the realm of possibility. Amends the penal code under section 532F, F for fraud, I presume. That was a joke.
Wait, now I got the question is, does it affect real estate agents?
God, will you let me finish this sentence? Then you can ask that question. Okay. Specifying the mortgage fraud includes making deliberate misrepresentations during the mortgage lending process. It criminalizes, guys. Did you get that part? These are felonies, okay?
Yeah, that criminalize felony is a big deal.
Thank
You know why? If you get convicted of a felony, you can no longer go to Canada.
Okay. It criminalizes instructing.
You can no longer originate loans either.
There's that.
So technical.
Okay. It it also criminalizes instructing borrowers to sign personal loan documents under the guise of business loans. In addition, it introduces blah blah blah, all this other stuff. So, and you must inform borrowers they could lose their homes if they fail to meet their loan obligations and advise them to consult with independent counselors. So, bottom line is the initial time I heard about this, I believe they said that this goes into effect 2026. So Linda, expound on whatever it is you know about this.
So it is effective immediately.
Oh, it is.
Yes.
Oh, really? Okay, good to know.
And so the premise behind most of it was that, first of all, they're giving bridge loans that are longer than a year. So the loan officer is aware of the fact that that bridge loan was not going to be a short-term loan. So that would be mortgage fraud. And the other one is you're giving loans to consumers who are going to be living in the property, but using a debt servicing loan type that's meant for businesses, like bank statements. But you know for sure that that person's going to be living in the property and they wouldn't qualify. So that's the reason behind that.
Okay, so this, definitely begs the question, what about all these people who need money out of their house and they don't qualify, but I get a little frustrated with some of this because I think there comes a point where, you know what I mean? Like, I love the ATR. I love knowing that someone can pay the money back, but I also love somebody being able to, use their asset, which is their house, to help them through whatever their current situation is. So, boy.
Yeah,
But
no, I mean, if you have someone with $1 million in equity and you give them $700,000 and they can't use the money that they just used to pay down the payments, like the kind of like, okay, well, what's the plan? Like I had someone the other this week that they couldn't qualify for a bridge loan because they're not planning on moving for another 2 years, maybe 3. And okay, well, bridge loans out. Well, like, what are your plans? Like, well, I could get enough money to cover me for the next 3 years, all my expenses, and have enough money to fix up the place and sell it for a nice profit. But that doesn't work because it's longer than a year. So now we're looking at doing a reverse and doing it that way, but that's a lot more expensive way of getting money.
Well, I will say though, I've done a bunch of bridge loans in the last year, and the first question and most important question is, how am I getting out of this? And the second thing is, can I make the payments? And then sometimes if anyway, so yeah, we'll see how this goes. But again, just be aware that these are now felonies, or maybe they always were, but they're really upping the ante and making it aware. And it bothers me that they are using, the word mortgage brokers as much as they are. Does that not mean that they think anyone else is the problem? Or
there's been Audrey, there's been a couple of states that have amended some of their ruling to more specifically, not that they haven't been, and mortgage fraud is of course a violation, it's what have you, but I've noticed in some of the other states they are using the word broker now to just be sure that they're covering all the players out there. So it could just be for that reason.
okay, so they're not I just don't want them targeting mortgage brokers specifically and thinking everyone else has their nose clean, because God knows we know that isn't the case, right?
Yeah.
So,
Hey,
um,
I
I
think
had
the
heard a
important
rumor.
part is that you need to make sure you educate the consumer,
yes,
especially on the bridge loan component of it, making sure that they are aware that if they don't sell their house in a year, they are in violation of the terms of the conditions of that particular loan.
is it a felony for them too?
It does. It says that anybody that's involved in the transaction.
Okay.
Well, like I have one
Wow.
right now who is doing a bridge loan for a project, but then the city delayed them and stopped them from completing the project they're working on. And now they're, coming up against that year, like, do we have to renew for another year bridge loan? It's like, this is kind of crazy because it's only 2 more months. Let's, can we just get an extension? It's kind of crazy sometimes.
That's a great point, Kevin. So I wonder about that. Linda, do you know?
So you would make sure you document it's not the consumer's problem that's having the delay. It's the city's problem. So make sure you document that so that it's not on your end or the consumer's end.
Yeah, but it also could be part of the borrower's fault that he delayed in getting this permit applications in on time because he keeps changing his mind about, what he can do and what he
Blame
can't.
it on the city.
Wow, wow, wow.
Hey, by the way, I've heard a rumor that if the CFPB goes away, NMLS is going away also. It ain't true.
Not,
That rumor?
not going to happen.
Not going to happen at all. I mean, there's a whole bunch of LOs like, oh man, I don't want to take 8-hour course again this year.
All right. So you want some history? Are you ready for some history, Audrey?
That is where we were going to start. We're going to start with, tell us about how NMLS came to be. And this, by the way, kids, is relevant because it takes us to today. So just buckle up and listen. Tell us how
All
it
right.
happened.
Won't go too far back, but obviously the collapse of 2008, right? The SAFE Act, if you do not want the NMLS or a mechanism such as the NMLS, you would have to literally abolish or amend the SAFE Act 2008. What was the purpose? So looking at it from a big picture, other countries, the world came to America and said, fix this problem. So the SAFE Act, prevent another mortgage crisis, protect the consumer, ensure ethical behavior, create sound mortgages, mitigate risk, the whole concept, which then led to Dodd-Frank, which led to TRID and qualified mortgage and so on. So 2008 SAFE Act was created by the NMLS was created by the CSBS, Conference of State Bank Supervisors, and the ARMOR, American Association of Residential Mortgage Regulators. And and Linda will have a chance to talk about the meeting with the CSBS peoples. The purpose is the states do the licensing. The NMLS creation of is just a shared database or a portal. And so if you look at it from the perspective of, do we need regulation? Well, if you don't have the NMLS, then there's no way for one state to know if somebody's a felon in another state. So they switch from state to state. So the concept is NMLS, all it is, and it's a nonprofit, believe it or not. And it was the creation of it was put together by FINRA because there was no other mechanism around. It's just a database, a shared portal. And Linda can have more to say on that if she wants to add, but do we get rid of the regulation or do we still want quality people in the mortgage industry? That's the purpose of the SAFE Act. And then, of course, all the other regulations dictate the type of loans we do and what have you. But you would have to dismantle the entire, what we know as mortgage licensing today if you got rid of it. It would just be, and of course, then with the Linda going to talk about the examination process for states, because there is no federal entity that regulates the state licensed people. It's done by the states.
So again, I would just like to say that when we hear that NMLS is a nonprofit and you're from California, it's so hard to believe that, but the money funnels through NMLS and goes to the state from whence you are licensed. So Holy moly. So not federally funded, not impacted by all of this. It would have to be legislated, although there was legislation introduced recently to abolish the CFPB. So we know that that is possible, but I don't think it's likely. Do you agree that it's not likely that that will happen?
Do you want to answer that, Linda?
Then
It's
they are.
definitely, it's not likely at all, because the NMLS actually monitors more than just mortgage. They do consumer finance, debt, money services, so it's just not mortgage. And the states are relying heavily on the NMLS to house all of the information from all of the entities that they are regulating. For example, if you're licensed in 50 states, you have one portal where you can look at all 50 states for that licensed individual and or company. And rather than going to 50 different portals to collect all the information that you need to regulate that particular entity. So I don't see it going away. I see it being enhanced with all the things that they're doing in regard to the state examination systems. So if you're in a state that's part of this state examination system, you can upload all your stuff into the portal. Other states can view it. They can accept those findings or they can leverage those findings, which means their state is a little bit more strict. So they want a little additional information that's necessary. So it could, if you're licensed in a lot of states, save a lot of time and effort of you being regulated by 50 different states all at the same time. You might need a whole person just to do all the compliance necessary for the exams.
And go ahead. The other component with the CFPB is the states actually rely on the general broad interpretation from the CFPB. Without the general broad interpretation from the CFPB, we would then, like Linda said, leveraging, well, some states are different, and then you could end up with 50 different states thinking one state says this is okay, another state says this is not. So
it's not just 50 states, it's 50 different regulators. So there's what, 58 different regulators?
And what do you do? And what do you do when that regulator's director commissioner's term is over? Somebody new comes in and they believe something totally different. And you were saying, hey, I'm compliant with this stuff. I've been doing this for years and getting approvals. Now you're no longer approved. We have to do this. Wow. So you see.
Yeah, that's our life right now, actually, is I'll swing from one way to the other to the other. And the bottom line is there's good and bad from both ends. And so it's a whipsaw, I think they call it.
So there was a report that was put out by the CFPB, one of the very last reports they put out to the states and telling them how they could be better at regulating these.
Well, there you go.
Hey, I want to acknowledge Brandon. It sounds funny. You think that's funny, Brandon. He mentions that there's felons and loan officers. And in our CE this year, we are showing, there's some stories that we have to show you that it is a top producer who has been, I don't want to give it away. You got to take your CE with us. Wow.
We talked about it at length when that article first came out about that top producer and the amount of fraud that they did over a 5-year time, and that they and I think their assistant it's crazy what happens out there. But then they catch them and they throw their tails in jail, which is not long enough for my taste, but that's just me. Okay, so Linda just got back from the NMLS conference, which is great. So why don't you give us an overview of what you heard, learned, talked about? What's going on there, Linda?
The best part of the conference is you can actually talk to all the regulators. So the state regulators are there. You can ask them questions. We work with a lot of compliance. So I had a whole list of questions for all the states that I work in. The mortgage call report version 7 is out for review. So they're going to have a new version of the call report. And they plan to update the call report every 2 years. And they are initially thinking about adding commercial loans to the reporting component. So for those who do commercial loans, who might be looking at
that means your debt servicing people.
So Linda, so when you talk about the mortgage call report, so this is probably the number one thing we hear about from mortgage brokers regularly. I do not have to fill this out, so I don't totally understand the pain, but we understand it is a little onerous and can be difficult. What are the changes, if you are privy to them, that are being made potentially that might make it better, worse? What are your thoughts on where we're going with that?
They just published it, so I haven't had a chance to look at it yet. But if you are a person that does the call reports, please look through it, because if there are changes, you have an opportunity to make comments. You know,
Oh, so we're in the comment section. Oh,
so how much is this reporting gonna take you an additional time and effort? You know, if you're the person that's filling out that call report, take the time to review it and submit your comments.
can you share that with me and the link to where they can share their comments eventually?
Yeah.
And then we'll have Jason embed that in our YouTube channel so that, or you could email me and I can email it to you, one or the other. So we'll put it in both places so that people are able to access that. And then if they have suggestions, they can comment. That sounds great. Okay, good. Keep going, Linda. What else did you get?
And we already talked about the state exam system, but talking about AI in the financial sector. Did you see the FinCEN alert that came out in regard to fake IDs and fake everything that's coming out using AI generated? So there's a
No,
new
but we-
SAR that has to be filed if you find any kind of deep fake AI generated documents in your loan process.
And we covered that in our CE this year.
Yeah.
We talked about fake IDs and fake all that, how easy that is with AI with the when we had the FBI on, Michael with the FBI a few months ago. So it is, yeah, that's a
Yeah,
increasing.
but I could just imagine what AI would do with a fake ID after my experience with having AI create a map of California by counties, and it made up the borders and it made up the county names. I was like, how did they come up with this? So yeah, I could just see, you know, an ID and it's like photos on the other side, or you know, it's totally
No,
wonky.
listen, if you know how to put in the right prompts, it's going to do it right. So that's the whole problem, is that they're so accurate that it's really hard for people to identify. So
you get the free AI is different than the ones that you pay for, because those ones are really advanced.
Yeah.
Interesting.
Just to you have to file a separate report. Tell us about that a little bit.
Yeah, so there's an actual SAR code that you would use when you file the report with FinCEN that says it's a deep fake activity that you're reporting.
Wow, I bet that gets right to the FBI's desk.
Yes.
Even know,
A lot of people, go ahead. I'm sorry.
I just don't understand how that's all like. Anyway, just moving along. Just ignore me. It is ridiculous.
Hey, Audrey, before you go on, I wanted to bring up. So last week we talked about renewals, and you remind the people how many people renewed in the state of California, versus, you know, we keep hearing how all the loan officers are disappearing, and we reported on how that's not really true.
I don't have the exact numbers in front of me, but essentially on the DRE side, so we have two regulators. On the DRE side, it was 550 people less than the year before. And on the DFPI side, which actually has more LOs than DRE, they were 374 or 76 people less than last year. So it was not a profound decrease, which
Are you guys seeing the same thing, Linda?
Straight. The commissioner.
So as far as the numbers in regard to education, it was pretty steady last year. It didn't decline rapidly.
Yeah.
But we'll see, they have the reinstatement period is now until February for most states. So we'll see who didn't finish in 2024, they still have till the end of February to reinstate. So that would be a better time to look at the numbers.
So I'll update them after this week, because the end of February is on Friday. Can you freaking believe that March 1st is on Saturday, for God's sake? Anyway, I'm a little blown away by
you know, well, it's only March is only 90%. I mean, February is 90% of all the other months. So, you know, yes, it's a shorter month. Well, it's always a bad sales month. We're missing 3 days. Come on.
Oh my God. Okay, so moving right along. Linda, what else you have from NMLS?
Okay, in regard to the AI, I know that California just recently passed some AI laws too. I'm not familiar with them, but that's something we're going to look at. And Colorado's passed new laws for AI, New Hampshire, Oklahoma, Texas, and Virginia. So AI is on the radar for a lot of the regulators.
So we can't use AI to create pay stubs and W-2s.
Tax returns.
Oh, God.
So complicated.
What if there's anyone who was doing loans in the 80s who doesn't remember someone doing that? Anyone in the 80s who from doing loans in the 80s? I'm in that.
I don't think no, there's nobody alive from the 80s.
I'm alive. Okay. So Rick says only 5 more shopping days until my birthday. Oh, geez, that's funny. Anyway, okay. So with that being said, so yeah, again, we keep hearing it just keeps getting bigger and bigger. We need to keep be very aware of, are people real? Like seriously. So and this is where I think it's interesting because as they are trying to digitize mortgage lending more and more, the importance of knowing your borrowers has never been stronger. So we really need to know our borrowers. As a matter of fact, the guy that I can't remember his name, Jerome something or another, not Powell, that we had speak at summer camp a few years ago, who was the convicted felon who had gotten busted for committing mortgage fraud. I mean, he never met his borrowers. He didn't know the realtor referring them to him. I mean, it was just this distance created by phone and email, et cetera, and that makes it easy to commit fraud.
And his only tell was people would ask him, so how much income do I need to show that I'm to buy this house? And then the W-2s that he would receive had exactly that income all the time. And after he got like 4 or 5 of these, that's when his spidey sense went off and he stopped working with them. But that wasn't enough to keep him out of jail.
It wasn't 4 or 5 of them. It was a lot more than that. And it wasn't until 4 years later that he gets a phone call in the morning saying, this is the FBI, we're going to arrest you this afternoon. So just because he stopped doing them, it didn't save him. And then he went into court, and the people in court, they were different names. They were completely different, these people he had been working with. And so, yeah, it's crazy. Crazy. So with all that being said, know your borrowers. And Andrew, you're muted.
Are you saying the loan officer or the borrower got in trouble?
The loan to prison. Wow. Yeah, went to prison. And we hear about this, on a fairly regular basis. It was really interesting to hear this guy speak to it. And by the way, when we caught up with him, he was working at an Amazon call center or warehouse in Arizona. And I mean, his life in financial services is obviously over. But his life was changed forever. And there you go. And we have Leila who says, I did loans in the 80s. I'm with you, Audrey. So it's, that was a thing. And it was, it was the Wild West, to put it mildly, and not in a good way. Like these days, we have all these loan programs. You can just do things the right way that are compliant and real and still get people loans. They just have to understand risk and that they are going to get a slightly different rate, and that's all okay. So there you go. And we have another comment here from, and God, I hope I'm saying her name right. I just won't say it again. So regarding call reports, they should include prompts that say that you don't service, if you don't service loans, skip to next section. There are many sections that don't apply to brokers, but that would be a place where you go into this link and you reply to their call for comment so that you can give your suggestions directly to the people who are in charge of the call reports. So again, email me, or I can't put it in the link. I don't know why. Don't ask. It's beyond my ability. So anyway, there you go. Linda, you're muted.
So the version 6 of the call reports is based on your profile within the NMLS system. So if you have clicked servicing, it's going to have all the servicing questions that you have to fill out. So if you unclick the servicing as an option of something you do, it would make the call report not include that. Okay.
So good to know. We have a comment here from Peter. He says, I beg your pardon, Kevin. I've been around since the 70s, September 1980. And then he also said Peggy said that. Peter said September 1988. And then here's Barbara, who says that she started in January of 1980. I mean, we've got some veterans listening here. This is great. We need to be teaching the youngins the good things from that time period. Really.
So Linda, why do all these veterans need to take NMLS classes every year?
In California, if you're over a certain age, you don't have to take education for real estate. So why?
Exactly.
So I can answer that question, Linda. I was teaching NMLS a few years ago, and we had just finished the whole section on RESPA and how important it is for people to make sure they're following the RESPA laws and no referral fees and da da da. And this man who was of a certain age comes up to me afterwards and he said, "So when I close a loan that was referred to me, I just write them a check for $1,500. That's fine, right?" And I literally didn't know what to do. I didn't. I was so dumbfounded.
Well, I had a similar one, just like that. Right after I talked about how no kickbacks, no referral fees, blah, blah, blah. And we had to go on break, and one of the attendees in the class, an older guy, not going to say anything else, he comes up, he goes, "Hey, I really like that the way you're teaching." And, it's like, listen, I'm not doing this much anymore. So, but I still get all this business. If I just give you my leads that come in the door, can you just pay me a referral fee for each deal? And I'm just sitting here like,
he wasn't even listening.
Wasn't even listening. Like,
it is crazy that is still a conversation 50 years after RESPA went into effect. Which it'll be interesting to see. There was talk about looking at some of these very, very old rules and seeing if there needed to be improvements made to them. So in this current environment, it'll be interesting to see if that actually happens or not. So
speaking of not listening, what, and this year's NMLS classes, what portions are required to be taught yet again because loan officers aren't listening during the class from previous years?
Or they're listening, but just not following the directions.
Top 10 violations examiners continue to find, and you will be amazed at the types of violations that are still occurring. And, many companies and loan officers, it's like they're just not aware. And I don't want to pick on people, but I just feel like there might not be aware. And no offense, we're going to get into it, but I think that's the difference of people who take live in-person or webinar versus the online where you fall asleep and have to do biosig. You're really not learning because it's not an engaging atmosphere where you can ask questions. And, that's the difference.
I had to take one of the bio classes last year for one of the states that, because it was one of the ones you guys didn't have in your repertoire. Otherwise, I'd have volunteered to teach it. But so I had to sit through an AI reading state law from the book, right from the regulations. And it was talking like this the whole time in section 13478, code 421. You cannot do this. And it just kept on going. Like, I wanted to shoot myself for 2 hours. I was like, this is torture. And then I quickly learned, wait, I don't even have to listen to this. I can step out of the room and come back, and I know the answers to the questions. I click, 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 and answer them. I'm good.
Well, most of them are watching you to make sure you're there, and so they're knowing if you step out of the room and you're in deep doo-doo, right? And how long, by the way, Kevin, did that 2 hours take you overall? Right. Because
4 hours. That was and I did not leave the room, just for the record. And I was diligent about it, and I was actually taking notes and stuff like that. And as soon as stuff came up, why does 2 hours of courses take 4 hours?
Yeah, exactly. Okay, so we have a couple comments.
And by the way, Linda, this was not one of your courses, so just for the record. But it was a competitor of yours that I decided to check out that you do some work with. So, but yeah, it was like.
Well, and I can answer Rick's question. I want to answer Rick's question.
Okay, what was Rick's question?
Well, just taking a test to recertify. And I totally understand. We're not saying you don't know how to originate loans. The reason that we go over it every year and have to have the education, and it took a while to wrap your head around it, but understand that there are changes. regulatory changes, there are violations, and our need to stay up to date.
Yeah.
And the requirement, yes, it should be more than 8 hours. They only have 8 hours. I mean, I think we should be having more than 8 hours. Don't shoot me, I know, but the concept is there's so much to learn, so much new, and taking the live then gives you that opportunity. But taking all the education, the whole purpose of it is not that you're not a good loan officer. It's that, do you know what the new regulations are, the latest violations, the annual trainings of AML, BSA, the annual requirements for updates on the laws. That's why they do it.
Well, and also, again, you're speaking to an audience of people who, a lot of them show up once a week at least and listen for an hour as to what's going on in the industry. So they are more up to date than the average person. But to your point, CPAs have to do 40 hours a year. And there are a lot of things that you have to stay on top of. So again, we try to bridge that gap because if you just show up 8 hours a year, you are in a vacuum, and there is no be helping your clients to the level that you should. So again, you've got to do something else. And I hope that this is part of that. But with that being said, go to the 8 hours, go be around humans. Remember when you used to go to the office and you would learn so much from the people that you were working with, whether it was what to do or not to do? That could also be the case, because I certainly learned a lot of things that I would never do from people I worked with. But there is something good about that interaction. So it's every time that somebody shows up to the live classes, they're usually very happy. I mean, depending on who the instructor is, you could have, one of us. I mean, I can tell you, it's not boring when I'm teaching in NMLS, like I can say it. Anyway, one of those classes. And Andrew certainly seems to have a little personality. So I think that Kevin always has something interesting to bring to the table. You just wait for it. So anyway.
So, and with that, I'm going to throw my quick one out there. So a lot of these courses, I had to sit through I'm involved in my Rotary Club, and we were doing some work with kids, and they required us to sit through a sexual harassment training program. And the guy comes out and he goes, okay, I know what you're all thinking. Like, why do I have to take this class? I would never sexually harass anybody. So why do I have to do this? And he pointed out, and this is how I always start the Bank Secrecy Act stuff, is while you wouldn't commit crimes, you need to be able to spot people that might do it. And that's the purpose of doing the Bank Secrecy Act and all this other stuff. And so the guy comes out with the beginning of the class and goes, so quick question, what direction does the arrow and the Federal Express logo face? And everyone's like looking like, what are you talking about? And so, yeah, what direction? Andrew, you know what direction? So I'm going to pull that up there. There's the Federal Express logo. Do you see the arrow? It's been in front of you for years and years and years, and no one ever seems to see that there's an arrow right there pointing to the right. Just because it's happening in front of you doesn't mean you see it. And the purpose of doing the Bank Secrecy Act and all these other things is so that you see it and you can catch it when it's happening. And the interesting thing about that story was, not 2 months after I took that class in sexual harassment training did I uncover someone who was harassing a bunch of members of my a business group that I belonged into. And I only caught it because I heard someone say something and I go, wait a minute. One of the things about sexual harassment is women typically don't tell a man that's happening. They only tell each other. They only tell other women. And I heard from another woman, casually, she was talking to somebody else, and she said something that triggered my senses, and I probed, and sure enough discovered that one of the members was sexually harassing the members of the group, and we were able to get him out because of that training. And the same thing works for, Bank Secrecy Act and finding, people are money laundering. If you're not looking for the right things, you're just going to miss it. And then guess what happens? You go to jail too.
Well, Kevin, there was something this is why, okay, a little talk about the CE. What we have this year, literally in our CE this year, we have understanding these new cybersecurity threats. And then you're going to say, oh, okay, whatever. But most haven't even heard of these yet. You'll even have there's new FinCEN alerts and updates. We actually go through scenarios of money laundering. Can you detect how to detect the money laundering schemes, and then even the social engineering schemes? And they're getting so good at being bad. But in our CE this year, we actually go through these scenarios and examples. It's practical application of the information. I mean, I can't speak for other people's CE, but our live in-person and webinar, it's not just checking a box for CE. You get to ask questions, engage, and it's actionable takeaways you can use in your mortgage business, things that are relevant.
Yeah.
And by the way, it's fun too.
Well, okay, so I just want to make sure before we run out of time today that we talk about the fact that the beneficial ownership information that we have beat to death over the last, I don't even know how many months or maybe year, BOI, remember that? It was on, it was off, it was on, it was off. It was, you had to do it by January or December 31st, $500 a day fine, 10 years in prison, your first child, all these consequences for not doing it. Well, guess what, kids? It's back on. So March 21st is the current date for when you have to complete this. Linda, do you have anything else that we should know about this at the moment? And just again, this is subject to change because God knows it's changed so many times. It's not even funny, but it's back on.
It is, that's correct. As of February 19th, they've given us a deadline of March 21st. If you have any interest in a business, you'll need to register with FinCEN.
And again, it takes 5 minutes online. For God's sake, don't fall for those scams where you've got people who are charging you $1,000 to fill out this form that you can do yourself or your clients can do yourself. So whether or not you agree with it, just you want to keep track of whether or not it's required, because the fines, if and when it's implemented, are pretty unbelievable.
$600 a day per.
I thought it was, anyway, whatever, 5, 6, do that times 365 days and, you'll have a number you will not like at all. And by the way, that's for every entity that you manage, that you have, LLC or corporation or whatever. So, do that math. Also wanted to say that the QCEW, my favorite, and Kevin loves to ask me what that stands for. So I'd like to share with you in this moment, Quarterly Census of Employment and Wages. I don't know why I can't internalize it. I have to look it up, but anyway.
I can't remember it either.
Q3 2024 report is in, and these are the real numbers. They cover 97% of the market, and as opposed to BLS, they're pretty accurate. So year over year, they charted 1.2 million job creations. That would be 740,000 less jobs than BLS reported, which takes us to 62,000 less jobs per month on average. And can you imagine what might have happened had the Fed had the correct information, or the markets? So I know I beat this to death, but I don't care, because it's annoying as hell to me that we cannot seem to be making decisions, whether it's at the stock market level, the Fed level, that impacts everybody when these numbers are wrong. So it drives me a little nuts, but that's where we are. In other news, as we look forward to the rest of 2025, and we were all hoping that rates were going to come down, and now hopefully you're accepting that they may stay about the same-ish, up a little, down a little, up a little, down a bit little, but in general, they're not really moving out of this, 6 to 7% range, hopefully. But the Fed has indicated in their Fed minutes that they're going to stop their balance sheet runoff mid-2025. So just a little recap. This is a good thing for us. They had, since I think last May, allowed up to $35 billion in mortgage-backed securities to run off every month and $30 billion in treasuries to run off every month, meaning that they weren't reinvesting. Because the market was the way the market was last year, it was more like $10 billion a month in mortgage-backed securities. They weren't getting $35 billion in mortgage-backed securities. So anyway, it was more like $10 billion from the MBS and then $30 billion for treasuries. So now they're going to start investing probably mid-year, but probably back into treasuries, not mortgage-backed securities. But since mortgage-backed securities often follow treasuries, it should be good for us. That's the bottom line. this should be good. But again, who the hell knows what else will come out of right field and all of a sudden it's going to do something else to the rate. So it's not like I'm going to hang my hat on this, but I will look forward to it, hope it happens, and hope nothing else happens that would derail maybe rates improving a little bit. That makes sense?
Makes sense.
Great, great, great. Also wanted to say that the inventory numbers were interesting. So the existing home sales came out for January, and these are closings on existing homes, not new homes. So it was down 4.9% month over month, which is normal for this time of year. Annualized pace of 4.08 million units. So there you go. It was up 2% year over year, and that is the fourth straight month of year over year increases in existing home sales. So all of this, nobody's buying a house, is nonsense. And again, if we go back to Dr. Lawrence Yoon, chief economist for NAR, they're expecting the existing home sales to continue to increase and pretty substantially in upcoming years, kids, not months, years. So that's good.
Good.
Inventory was up, yes, it's up 16.8% year over year, but down 17% from January 2020 pre-pandemic. And so again, we still don't have normal inventory numbers. Sold above list price is at 15%. 15% of the properties are selling over the list price. It was 16% last year, so not big.
Same thing.
First time home buyers, 28% of the market. That's the same. Cash buyers is 29% of the market, down from 32% last year. That means more loans for us, babies, more loans for us. And then investors are 17% of the market. That's the same. So those are all good things in terms of there's more people that are getting mortgages versus paying all cash. It means that when your buyers are going in to make an offer, there's a little less of the cash offer situation that is going to beat them out. So all in all, good, good, good. So what else would you like us to take away from today, guys? Linda.
Well, I got something, you talked about California and specifically with wildfires and what have you. We actually have something in our 7-hour this year that a real solution to affordable housing that we're going to talk about. Not just, hey, we're covering our non-traditional, we're actually going to come up with a solution. Did you know these people in the wildfires, they can get 100% financing?
Yes.
Did know that, but we'll save that as a little nugget for later. Yes.
Yeah.
About this.
Yeah, except I don't think it's going to happen in the LA wildfire.
Yeah, those loan limits aren't going to work down in.
Yeah, it's going to be a little challenging there at $5 million homes.
And waiting 18 months to 2 years for a permit might be challenging as well.
Actually, I got a question. How many companies are having courses, in-house courses for their entire office? Anybody? Is that popular?
Some companies do that. I don't have the statistical numbers for you, but that is.
I used to love that when we'd go into a particular company and the whole staff there, and those are fun classes.
That is.
Everyone's got some camaraderie with each other. They all know each other.
Can I share that QR code while you keep talking?
Yes.
Keep going.
Okay.
Yeah.
And next week, just for the record, we have Diego Sanchez, who's the president of Housing Wire magazine, who will be joining us, which will be very interesting. I'm looking forward to talking to him. He has an interesting overview of the market. So we have that to look forward to.
So this QR code is to sign up for our email list so you know when the upcoming live classes for Mortgage Education Institute will be. And of course, in California, live taught by Kevin and Audrey. And so exciting there, definitely.
We can teach in other states, Andrew.
Yeah, we can teach other states too,
Well, and if you're on here and you have a company and you want to have a live class somewhere, by
Audrey and me, they have no problem. Or if they like Andrew better, Andrew can go out there too. Contact
us and we'll set something up. This will take you to our website, and then you can sign up for the email list, and you can get the live updates for our classes when they come out.
The other reason I was talking about the company sponsored classes is it's actually really a great tool for recruiting new loan officers if you want some more loan officers, because you can have local loan officers attend and join and see how fun your group is to work with. And I've seen a lot of companies that do this on a regular basis. It's kind of fun.
And I just got an email or a text from somebody who was upset because they thought I said that I updated my resume. I don't even have a resume. So that being said, have a great week. Thank you to Andrew and Linda for sharing all that great information with us. NMLS is probably here to stay. I say probably because nothing is for sure at all anymore, but it looks like it's pretty clear that we're going to have NMLS going forward. And so go get loans. Go get loans, guys. They're out there. They're waiting for us. There's a lot of buyers that need to buy. So there you go. We will talk to you next week. Bye, guys. Thank you.
Thanks, guys.